Recognizing changes. Markets rarely remain in a steady state, they're dynamic and constantly evolving. As traders, our job is to stay attuned to signs that the market environment may be changing. First, keep an eye on volatility. When price movements suddenly become more aggressive or unpredictable, that's often a sign of increased uncertainty or a shift in investor sentiment. This can happen around economic reports, geopolitical developments, or unexpected earnings announcements. Second, pay attention to market correlations. For example, if two asset classes that usually move in opposite directions start moving together, or break from their usual patterns, it might indicate a broader shift in the market structure or investor behavior. Lastly, look for economic shifts. A sudden change in interest rate policy, a sharp move in inflation numbers, or significant employment data can all act as catalysts for new market trends. These fundamental changes can render your current strategy less effective if not adjusted accordingly. The key takeaway: don't get caught off guard. Make it a habit to regularly evaluate whether the current market still aligns with your assumptions. If not, it may be time to pivot your strategy. Click the link in description to learn more.